Okay, good evening. So we are now looking at the interpretation, or not, the preparation of the final accounts. That is the trading profit and loss account and the balance sheet. So these two financial statements are very, very important. The income statement and the balance sheet. So what is most important is to understand that the income statement shows the financial performance of the business. So under income statement, this one, you look at the performance of the business. In terms of the gross profit made. So in terms of the gross profit that has been made during the accounting period, and of course, as well as the net profit. So the major one, gross profit, the net profit, and the income statement. Now, we are going to look at this question because I remember I'd given a format, but just a reminder that income statement is also called the trading profit and loss account, just a reminder. So we have the gross profit and the net profit under the income statement. So we are now going to look at this question. So the balance sheet will show, you just want to just do a summary because for those who attended the class last time, we did the format. Of course, those who didn't attend, we are not left out. You will still understand. So this one, we have assets. We have assets here. Of course, also we have the liabilities as we look at the balance sheet. These are the major ones that we look at in the balance sheet. Of course, now here we have the formula, the equation in accounting equation. To summarize this, the formula for the equation here, we say total assets. So total assets is equal to total liabilities, then plus the shareholders' equity. Shareholders' equity. Now, let us get straight away into the question that is there so that we start solving it right now. Okay, so we are looking at this question for the trial balance, which checks the accuracy of the double entry system in accounts. So we're getting down to question 6 of November, 2017. The trial balance, the following is the trial balance of Yokomo Limited as at 31st December 2012. Now, like I mentioned last time, that the trial balance checks the accuracy of the double entry system in order to see if the entries were posted correctly. Because we know for sure that in double entry system, we debit the receiver and credit the giver, like we looked at that question from one of the exam papers last time. So now, the following the trial balance of Yakomo Limited as at 31st December 2012. Yakomo Limited trial balance 31st December, we have the debits and credits, purchases 250,000, admin expenses 92,400. Then getting down to equipment at cost is 60,000. The distribution cost is 54,000. The opening stock, the inventory that we started with, was actually 25,000. The trade debtors, which are customers, the debtors are also called customers. When the term debtors come in, because these customers are buying on credit, that's why we have the term debtors. Then we have, of course, the other one, which is the loan. A loan is a long-term liability. So a loan is a liability, of course. Then we get down to the other one, which is trade creditors, which is the current liabilities. So this one is a long liability, a loan, because we repay a loan in the longest possible time. That is why we are saying it's a long-term liability. Then getting down to the trade creditors, these are short-term liabilities that fall within a year. The creditors, the bank, if the bank is on credit, meaning it's a bank overdraft, your account has been overdrawn, meaning that any deposit that will come to that account, that is going to hit that account, any deposit that will be taken away to be taken, to be swallowed. The share capital is the capital that you start a business with, the opening capital. All right. Then we're getting down to the sales revenue. Sales revenue is always as a credit balance because we give to customers, we sell to customers. That is why the sales revenue as a credit balance. Now, getting down to the retained earnings, this is more like the internal equity. Retained profit is a profit that came from the previous accounting period. Okay, so we had 105,000. And then other creditors, okay, all these are what we call liabilities. Just unmute myself. Okay, so this is about what we are looking at. So you are given the following additional information relating to the year ended 31st December 2012. The additional notes, the closing stock at 31st December 2012 was 55,000. The depreciation is charged at 10% on cost of equipment. This has not been accounted for. So the depreciation on cost is on a straight line method. Okay? So when we talk about depreciation on cost, anything to do with the depreciation on the cost, then this one means straight. Okay, so this one means the straight line method. So the straight line method of depreciation. Okay. Okay, so this is what goes on. Now, getting down to the other one, we are looking at the depreciation that has been here on this question. It was on the, of course, the closing stock, as we do the workings, closing stock, the stock that we closed the business with was 55,000 for this company. So under this one, first of all, our depreciation was on the, as we go back to this question, we have only one fixed asset here, which is our equipment, is the only fixed asset that we have. This equipment is the only fixed asset that we have, which we got this equipment at 60,000. The only fixed asset, an asset that is fixed. Examples of fixed assets, we talk about assets such as a building is a fixed asset. Then also, the other fixed asset to talk about motor vehicle is a fixed asset. Of course, a motor vehicle is not a very good fixed asset because it depreciates faster among the other fixed assets. Then we have other fixed assets such as fixtures and fittings and plant and equipment. So we have only one fixed asset here in this question for Yokomo Limited. Only one fixed asset, which is equipment. And then I've told, first and foremost, as we come here, as we do the workings, we have, we go to the workings, we can say the first workings, as we start answering this question now. So the workings for this one are what is the most important thing. So workings for this Yokomo, the first one is closing. The closing stock for Yokomo was 55,000. So the first one, we say closing stock, that is number one. We are just doing the workings, so closing stock, the stock that we close the business with. In this question, it was 55,000. Okay, so this 55,000 was a closing stock. Working two, so this one will appear both in the income statement, IS, income statement, IS, and as well as it will appear in the BS, which is the balance sheet. Balance sheet shows the financial position of the business in terms of how much assets the company has and the liabilities that the company will incur during the accounting period. Okay, this is about the first one, the closing stock that we close the business with. It's for 55,000. That is working number one. Getting down to working two. Working two, we are saying depreciation of the equipment is 10% on cost. So 10% on cost for the second one on the depreciation. So equipment, okay. Deep is actually going to be, our deep is actually going to be the 20%, that question says 10%, of course. So depreciation, so meaning if it is on cost, meaning that it is on a straight line method. So depreciation on the cost, it is on a straight line method. Okay, so now what we do under this one is that we are going to say the 10 over 100, then multiply by, we got the equipment as 60,000. So meaning our depreciation here is going to be 6,000. That's a depreciation of this equipment. All right. Now, getting down to the working three. Working three is actually telling us something. Working three is saying equipment admin expenses include the rent which had been prepaid. So here, any prepayment should be carried forward. You don't have to overstate your amount. You overpaid for admin expenses, a prepayment of amounting to 10,000. So you need to adjust the admin expenses. This has never been adjusted for. So why did we overpay? So we should remove amounts that we overpaid for the accounting period so that we can just look at what should be there for that given period. So that is about the way to go for the admin expenses. So now, admin expenses, we have 92,400. That is how much was paid. But within this amount, there was an overpayment of 10,000 kwacha. So there was overpayment of 10,000 kwacha, which was a prepayment, prepaid. So meaning you have to remove it because it was an overpayment for the next accounting period. So the 10,000 should go to the next accounting period. So an adjustment that should be made concerning admin expenses will be as follows. So admin expense on numbers working three. So admin working three, admin expense. We are going to simply say we have how much did we pay for admin expense. So admin expense was 92,000 400. So within this amount, there was an overpayment. So this one should be this less a prepayment. So you subtract the prepayment. The prepayment was 10,000. Okay, so 10,000 is a prepayment which we should remove from this amount because these expenses were overstated. They were actually overstated. They were not supposed to be this amount. Within there was a 10,000 that was overpaid. So we need to make sure that we remove that 10,000 from this amount. So this means we are going to have 82,400. This is amount that will be an expense amount, which would go to the income statement under expenses. So this 82,400 will go to the income statement under expenses. All right. So this is it. Or income statement is also called profit P&L, profit and loss account. So that is amount will go there in the income statement as an expense. Now, what happens to a prepayment? This prepayment, as we are looking at this prepayment will actually go prepayment of 10,000 kwacha. This one will go to the balance sheet, go to BS. BS simply means balance sheet, okay, as an asset. So this one will go to the BS as what? As an asset. So this is what goes on as we are looking at this kind of a problem. So any prepayment goes to the balance sheet. And then not only that, what is important here is to understand when you see that in the question, you have a bank which is on the credit side, means that it's a bank overdraft. Okay, the bank on the credit, so bank over, when you say bank overdraft, it means the amount has gone to credit. Okay, it's not an asset. Bank overdraft is not an asset, is a liability, because you are going to actually pay for it. It's a liability, money going away. So bank overdraft is a liability. So we're going to say bank overdraft. Okay, bank overdraft is a liability because it means we are owing. You have overdrawn your account. You have actually gotten more than what you're supposed to get. Okay, so now just to go to the question now direct so that people can understand clearly. I just wanted to finish the workings so that after finishing the workings, then people would understand. So this prepayment and asset admin expense we adjusted for, and then we have also considered the workings for which is your Yokomo. Okay, so Yokomo Limited. So this is just about what goes on as we are looking at this given kind of a problem or question. Okay, so we can go to the question now. So after this one, after the question, the trial balance for Yokomo Limited, and that's 1st December 2012, we have these ones. So purchases, debit balance, expenses, admin debit, all expenses and assets, they have the debit balance. So sales revenue, we have 535,000. Capital, we have 10,000. Then we have, of course, the purchases, we have 250,000. So now we can go to the preparation of this statement. Okay, so now workings, the statement of profit and loss, these workings for Yokomo.
Excuse me, Mr. Stanley.
Yes.
just on the diagram above, where is it bank? Maybe just scroll up a bit.
Okay. So which one are you talking about?
The question paper.
Okay, the question paper is this one. The question paper is this one. Feel free, ask as many questions as possible, boss, so that we can be together as we look at questions of comprehensive income and balance sheet. Yes, what's the question, boss?
Okay, scroll down just a bit. I want to see where the figure for the bank. Is it on the credit side or debit?
The bank is on the credit side, so it's a liability. It's here on the credit. This is the credit. Have you seen it? This is the debit and the credit. So the bank is on the credit side.
Is it not supposed? Is it not an asset?
Come again?
Is it not supposed to fall under credit?
No.
Maybe I'm confusing myself.
Okay, listen, like I mentioned, the bank is an asset. In accounting and banking, these are totally different things, like I mentioned the other time. In a bank, what you are doing is financial and management accounting. In accounting, when there is a deposit in a bank, you see, when the bank is receiving, it's supposed to have a debit balance. Okay? I'm sure you understand what I mean. So in accounting, when you have a credit balance like this, it means that it's a liability in accounting. Okay, it's a liability in accounting. So it's a bank overdraft. You have overdrawn your account. That's why it's on the credit. That is the way it's supposed to be. So the bank should be, if the bank is on the if the bank is on the debit side, it means it's your asset, and it should appear under the current assets. Under the current assets.
Current assets.
Yes. And what is most important? What is most important here is this. I think for those who came through at one point or attended the class, you can see I'd given them a format of the income statement and balance sheet. It's unfortunate that I haven't included here. I would have included for those other ones who missed the class, but there's no problem. That can be done. As I explained, they'll be able to follow through. And there's still more. I will still have to give you that format. I can send it so that I can run through so that you understand why. So this is why this bank is on the credit, is a liability. Share capital, quite right, because capital invests in the business. That's why it's a credit. Sales revenue is on credit because you sell to customers. Equipment is your asset. All assets and expenses have a debit balance. That's the way it is in accounting. A loan is a liability because you're owing. All liabilities, they have a credit balance. All liabilities and income, they have a credit balance. Okay, that is one thing you should know. So, the same way as the retained profit, this one is on the credit balance. Creditors, other creditors is on the credit what? Balance. So this is about what goes on as we are looking at this question. So from here, there were these additional informations that we looked at that from just explaining for your COMO. So we're looking at your COMO. I have to emphasize, I've looked at this as a basic question before looking at other comprehensive questions, which are detailed. All right. So the trial balance of your trial balance checks the accuracy of the double entry system. So before we continue, are there any questions so far? Is there somebody else behind before I start solving this one? We prepare, because the requirement of this question is that we need to, the requirement is that prepare the financial statements of your Limited, which means the income statement and the BS, so income statement and what? Balance sheet for this kind of a question. So you're finding the income statements, which is income statement, the comprehensive income, and then this is financial position. Statement financial position, that is the same as balance sheet. Okay. So now from this question, we can now look at the solution, which is here, the statement of profit or loss. the workings for your Como. Closing stock was 55,000, which is here. All right, 55,000, which is there. Then we have the depreciation of equipment, which one? This one was SML. SML simply means straight line method because it was on cost. So depreciation on cost means it's a straight line method of depreciation. I overemphasize. Depreciation on cost means straight line method. So you just, so this is straight line method, SML, straight line method, okay, of depreciation. Okay, so we are saying this is only the straight line method. So this one is a depreciation on the cost of an asset. That's what it means by the depreciation straight line method. So that's why we got the 6,000 kwacha here, or depreciation on the cost. Now, the prepayment was admin. We prepared the 10,000, which we got the 2,400. 10,000 appears in the balance sheet as an asset, okay? Because your prepayment is your asset, you can claim for that amount. All right, then we get into the solution now, okay? So the solution here says you need to actually look at the Como Limited statement of comprehensive income for the year ended 31st December 2012. So the first thing to do is this is how this one is supposed to be. So this column is for credit, this one is for debit, and then this one is for adjustment. So this is what we have concerning this kind of a problem. So we have the one for sales, then we have the one for, so the sales is the starting one, the statement of comprehensive income for the year. The term to use, the term not to use is for the year ended, for the year ended. Okay, so sales, we got the sales from where? So this is how you're supposed to have 1, 2, 3, 4 columns. Okay, for be it for the income statement or be it for the balance sheet, you need to have 4 columns as we are looking at these 1, 2, 3, 4. So the sales, we had 535,000. So where is it coming from? The sales is coming from here. Sales revenue, 535,000. All right, so you pick this one. Or any other entry, any other figure here should be used. All right. So the sales revenue is 535,000. Where does it come? Using the format, sales is coming there. Then what next? This column is for adjustment. Oh, well and good. If you have done the workings somewhere, like as it were here, we have done the workings on a separate paper. So meaning this column for adjustment, you can leave it blank because the examiner would have already seen the workings to see that, okay, these figures, where they're coming from. All right, so now, opening stock is the stock that we started business with. We started with 25,000. Where is it? You have to look for it. The opening stock is 25,000. Where is it? It's here. Inventory and stock, they are one and the same thing. So stock and inventory is just one and the same that we need to actually look at. So we have that one, which is 25,000. So 25,000, you record it. Okay, we record it here. 25,000, you record it there. Now, after you open with 25,000 stock, what did we do? We purchased some more stock. Okay, 250,000. We have to find it. Where is it? So we have to go and check. It just says we have 250,000, which is here. So what is 250,000? We have to add what you opened with plus what you bought. What you opened with as a stock plus what you bought, then it's actually giving us the total stock available for sale, which is 225,000. Now, here, please, we sold some of them. We remained with the closing stock of 55,000, which we can even see from either workings here or from the additional information here, where we're saying closing stock is 55,000. So what happens next? When we get to 55,000, you subtract it from there. This is the cost of sales. Now, cost of sales, this one should be in brackets, okay? So now you get the gross profit. Gross profit is equal to sales, okay? Then minus cost. Cost of what? Of sales. This is how you get the gross profit. So please, this is one is what goes on. We are getting 315,000 as a gross profit. Now, from the gross profit, we have to find the expenses. What is expenses are we looking at? Admin expense was there, among the expenses, admin expense. We removed the prepayment. So the actual figure to go in the income statement. So this is income statement, or it should go into the profit and loss account. It's 82,400. So it's admin expense is 82,400. We looked at it. Distribution cost is an expense as well. So we are distributing of what? An expense. One is falling under expenses. Okay. Please, if you are behind, let me know so that we can run you through. Now, why are these costs? We come here and check. The distribution costs, you will check from here. They are here. 54,000 as distribution cost. So I'm supposed to make sure that all entries in this question are just considered. Okay, so the cost of distribution is 54,000. All right, then. So we get down to the other expense. The other expense, of course, depreciation is an expense because it is the loss of value or wearing of assets, loss of value of assets. And we looked at it to say this one is a depreciation is 6,000, which should appear in the profit and the loss account. Okay, so this is about what this question came in. So we have this one, which we are supposed to account for. So depreciation was equipment was 6,000. So the sum of this one, and this one, it gives us a total expenses of 142,400. Now, 142,400, you subtract this one should be a minus. As we subtract here, we are getting the net profit of 172,600. All right. Now, I have to make mention here that our net profit, if you are to find the net profit, okay, is actually going to, the formula for net profit is equal to what? Net profit is equal to gross profit. So gross profit, then minus what? Expenses. So this is how you find the net profit. So gross profit minus expenses. Okay. So about this is what goes on. All right, then. So we get to this one. Now, under this net profit, you should add the retained profit from the other year or as an opening balance. Okay, so add the opening balance of this one. So our opening balance should be there was okay. Okay, so the opening balance, we have it. Okay. So we have the opening balance of retained earnings. We're supposed to add it there for us to get the amount to go for. Okay. So this the retained, so we're supposed to add the retained profit of 105,000. Okay, so 105,000, and then it gave us the net profit carried forward after adding this one plus this. So after adding these two, the 172,600 plus this is giving us 277,600. Okay, are we following so far?
Yes. Yes, sir. Can you come again on the, you said which first paper was this? Hello, sir?
Okay.
Hello,
Okay.
sir?
Yes, I can get you. You can talk to me.
Oh, okay, I've seen it. December 2012.
Which
The
one is
paper.
that? Which one is that? Which one were you looking for?
I'm asking this paper. Yes, I'm asking this paper. Okay. I wanted to see which year was it.
Oh, your Como limited as okay.
Thank you.
All right, you're welcome. So feel free to ask questions because from this question, from this one is where people have a problem on the adjustment on how you prepare the income statement and the balance sheet. And from here, if you don't understand the preparation, an interpretation may be difficult because you're not going to interpret the statements that you have prepared. You got out an interpretation of the financial statements. So here
Do we have the retained earnings on the table?
yes, retained earnings are here 105,000. Have you seen them?
Oh, okay.
So you add the retained earnings, the retained profit. You cannot throw the profit that you made last year, an example. So this profit is a profit that for it to be retained on 1st January, meaning it was a closing balance for the year 2011. What we closed with in 2011, we brought it down. So that's why it was the opening balance for 2012 because this is 2023. On the closing date of 31st December 2023, the closing balance that we are going to have on that date, we are going to make sure that we carry it forward to 2024. So to be an opening profit for that year. So that's why we have to account for it. That's why we had to add it to this one. This is 105 plus the profit that came in. We subtracted 315,000 minus the total expenses. We got 172,600. And then we added the retained profit, which we have shown you where it is in the trial balance. This is a trial balance, which is balance that came from somewhere else. This trial balance came from the ledger accounts after they prepared the ledger. For those who came through for that class that time, of course, we are still together running through on preparation of the ledger accounts. So we have gotten our profit that we should carry forward. Net profit carried forward is 277,600. So this marks the end of the first part of the question to do with the preparation of the statement of comprehensive income. All right, now getting down to the other one, we need to prepare. Yes.
So is it possible you could adjust the solution so that we can take a screenshot? Maybe when we are practicing, we can always refer to the solution.
Okay, so me, can you get this?
Or you can just send it in the.
No, you can do one by one. I'm redacting according to the request. So you can get a screenshot. When you are done with the screenshot, I can scroll down a bit. When you are done, I scroll down a bit.
From the beginning.
From here?
That's from the question.
Okay. Okay, so I was saying, that's from the question. The question is this one. So when you do, you tell me we proceed. So that at least you are not left behind.
Proceed.
Okay, we can proceed.
This question has already been sent
Proceed.
to groups.
It's the one that you sent. Okay.
It's already been sent and the solution's already sent, so there's no need. Let's go to something else. We'll end up wasting time.
What should I do? Okay, so we can continue. We now get into this question. This one has been sent to the group, so you can check there and thought. And then I want to just explain now. For now, we are getting the statement of financial position of this company, Yokomo Limited. So Yokomo Limited, the first part of it, we are done. We do with the workings. Depreciation also goes to the BS, which is the balance sheet. Okay, it goes to the balance sheet as well on the aspect of depreciation, the equipment, prepayment, and other things. Now, you can look at the Yokomo Limited balance sheet as the 1st December. So here, the term we use for balance sheet or the statement of this one, you can also say statement of financial position. Statement. So we have the statement of financial position. So the fixed assets, the cost, depreciation, and net book value. The equipment cost was 60,000. So the cost of equipment, as we go back here, okay, the equipment cost was 60,000. That one. But don't forget that this equipment depreciated by 6,000 according to the straight line method. So its value will reduce. All right, so it will be 6,000 minus 6,000, which will be the net book value. This one simply means net book value. So the net book value of this equipment, okay, net book value of this equipment is going to be what? 54,000. The stock is 55,000 according to this. It's 55,000. All right, so we have 55,000 there. Then what else do we have? We have the other one is trade debtors. The trade debtors after that one, after the stock, you go for the trade debtors. Trade debtors is 21,200. That is for the trade debtors, 21,200. Okay, trade debtors. Oh, sorry, it is 240,000. 240,880. 240,880. That is for the trade debtors. 240,880. Okay, so 240,880, which is this one. Don't forget, we are not putting stock under depreciation. This one has been closed. This one has been closed. This is the new thing that we are looking at down. So this one ends just here for the fixed assets. They don't think like we are putting stock under depreciation. No. The trade debtors is 248,880. The prepayment, remember, was 10,000. As I mentioned that the prepayment should go to the BS, which is the balance sheet. Okay, so it appears in the balance sheet as an asset. Of course, which asset as a current asset? Okay. This is about what we have on this one. Okay, so now we get to the information. So here we have the prepayment, which is there. So the total assets, you add this one, this one, this one, and this one, 305,880. That is on the total current assets. The current liabilities, trade payables or creditors. Okay, so what are we having for creditors? So for creditors, we are going to we have the 21,200. So we have 21,200 on creditors. So 21,200, which is this one here. 21,200 trade creditors. So after that, we have now the other creditors, which is 29,580. 29,580 from here. 29,580, you can get it here. 29,580. Other creditors, 29,580, which is this one. Then what next? you add these ones, bank overdraft, because it was on a credit, it's an overdraft. You add these ones, we are getting 52, 280. Then working capital is the difference between the total current assets minus total current liabilities. You're getting what? 253,600. So these two, you're supposed to add this one plus. So when you add this, you're going to have capital employed. So what is capital employed? Capital employed simply means capital employed simply means this one is equal to working capital is equal to working capital. So we have it's what called working capital. Then plus the total fixed assets at net book value. NBV simply means net book value. So this is our capital employed with working capital plus the total, but working capital we know is current assets minus current liabilities. That is only working capital. Current assets minus what? Current liabilities. That is how you get the working capital. Please take note of that. So capital employed is equal to working capital plus total fixed. So capital employed, working capital plus the total fixed assets at net book value. Then they just so and then when getting down to this one, we are getting now working capital this one, capital employed minus long-term loan. Long-term loan, we have the long-term loan in this given question paper. The long-term loan in this paper is actually, okay, this long-term loan is 20,000 kwacha loan, which is a long-term liability. So from capital employed, we have that loan, which is a 20,000 kwacha loan, meaning that we are going to have the closing capital of 287,600. So this is a balancing figure. This is a balancing figure. It should balance with the other one. If it doesn't balance, then there's a big problem. We need to know that somewhere, somehow, we could have gone wrong. Now, the business was financed by capital. Our capital was what? We go back and check the capital base that the company started with. Getting down to this, we have the capital base of, as we can see, 10,000 capital, opening capital that your Yokomo Limited started with. All right. So now, after that, we can now say, okay, capital base is this, add net profit. Net profit came from where? The trading profit, income, comprehensive income. It came from the income what? Income statement or profit and loss account. This is where this one came in. So after adding these two, we have this closing capital here. Okay, so closing capital as well is giving us the same answer. So this question has been balanced because this one and this one, they have reconciled. We have done the reconciliation statement. Okay, so we have reconciled. So this marks the end of this question on preparation of final accounts, the balance sheet or the statement of financial position, okay, of Yokomo Limited. And then, of course, we have looked at how to prepare the statement of comprehensive income for Yokomo Limited, which is this one that shows the profit that Yokomo Limited generated, which is 277,600. So as an accountant, this is what you need to prepare. That's why we're doing this course, so that you know how to prepare the statement of comprehensive income to find how much profit you have made and the expenses incurred during accounting period, as well as the gross profit that has been generated in this kind of problem. And then balance sheet shows the financial position in terms of how much assets, the fixed assets, the current assets that the business has, and then also the liabilities that are there, so that we actually now determine the viability of this company. Are they making profit? Can they be as a going concern to continue operating for the foreseeable future as a company? So this is about this question. This is how this question was all about. So we have done the adjustment of this kind of question, looking at the information given for your COMO. You account for what you have been given, you adjust the prepayments and advance payment should appear under current assets. And you also look at the which entry should I start with. Always we start with the sales revenue and getting down according to the format for the income statement. Okay, so this one is what we've done. So what is important is to have time to go through and understand, unless there are questions so far. Please.
Mr. Stanley,
Yes,
I've got a question,
no problem.
but it's also on the statements of accounts, but not on this question. It's a different question. Just how to treat it is it's an adjustment, a period end adjustment. Can I ask?
You are most welcome.
Oh, okay.
Yes. Go ahead.
Mr. Stanley,
Yes,
am I audible?
I can get you.
Just for the verbs. Who was your roommate at the time?
Okay. Okay, so my question is, we have a trial balance, and in this trial balance, there's an expense for salaries, which was paid through the bank. They have given a figure there in the trial balance.
Okay, so
And then this
so now that expense was for which was for which one? Was it for the salary or was for which one?
So this expense in the trial balance was for the salary.
Okay, so which means
Okay.
so meaning before you continue, which means
I haven't finished the question.
okay.
Yes, so we are preparing the statements December, and I mean 31st December 2021. And then in the adjustment, there's a note or there's an adjustment which are saying the accruals of 198,000 as at 1st January 2021 related to salaries, which amount was paid through the bank in January 2021.
How much
So I
was
wanted to know how you treat it.
how much was it? How much was it for accrual for salaries? How much was it?
They are saying it was 198, which was as at 1st January 2021 related to salaries, which amount was paid through the bank in January 2021. And we are preparing the books of accounts 31st December 2021.
Okay, so the amount involved is 198 what?
198, yes.
Okay,
So how do you treat this one? How do you...
Okay, thanks very much for that question. Okay, so the way you treat that amount when it's an accrual, the first treatment is this. Okay, let me explain here. I'm sure you'll be able to see my whiteboard. So accrued salary. I'm answering your question now. Accrued salary of amount of 180 kwacha. 198 kwacha.
198,000.
Okay, so meaning first and foremost, the treatment is first you add back. Add back. So the treatment is what we are looking at now. So treatment is that you add back 198 kwacha to the salary that was paid, meaning that the salary that was paid was it. So you're adding back 198 kwacha to the salary that was paid. Okay, to salary that was paid. So I don't know, you haven't given me the salary that was paid beside the
The
198.
salary that was paid was 230.
So first of all, so salary paid. So you say salary paid. So there was something that was paid. That's why. So your salary, what was paid was how much? It was how much?
230. 230.
Or 230 kwacha. So meaning to this amount, there is a salary accrued now. So add, because you are owing, so add for the year, so the salary accrued, you should add that amount, which is okay, you should add a 198 kwacha. Why are we adding? Because we didn't pay for it. So if you don't add, the profit may seem as if we are doing very fine. In actual sense, there are some people that we didn't pay salary. So that's why we are adding back to that year. Okay, so we're adding back. So meaning what we should take as salary expense for the year should be 428. Okay. That is one thing, that is one treatment. So accruals we add back. Prepayment we subtract. Okay. Accruals okay, so we add back. Then what else? Prepayment we subtract. So we add back to expense. We add back to an expense. Then prepayment. So now here, what it means is that under liabilities in the so this is in the income statement. This is what we are going to do. Income what? SIS. So just write in full to say income statement. You are going to take this amount as an expense. So this one will go as an expense in the income statement when you are after you have added. So this one will be an expense in the income statement. Okay. So IS expense, income statement, we're emphasizing. Now, under liabilities, okay, under liabilities, this 198 will go under liabilities as current. Under current liabilities, the accrual should appear there. So accrual should appear under current liabilities. So accrued salary should be here in the balance sheet. Now this one should go in the balance sheet. So this 198, it will be that's how it will be treated. Okay, so accrued salary of 198 should go to this accrued salary should appear in the balance sheet as you should also take it down there. So it will come 198 in the BS under current liabilities. Which current liabilities am I talking about? So this is how you treat it, first of all. I'm coming back to it. What I mean under current liabilities, here on this one, we are going to say under this current liabilities in the BS, in the balance sheet, under this section. After trade payables, you are going to have accrual. In fact, after before bank overdraft, you are going to have accruals. So that is where that's accrued salary of 198 would have come. You record it here. Have I answered your question?
Yes, you have. Thank you very much.
All right then. Any other question?
Mr. Stanley,
You could have, yes, please.
hello.
Yes, I can get you, please.
Another one,
Uh-huh.
another one, yeah,
Yes.
probably the last two. I
Uh-huh.
want to just also get a clarification how you treat them.
Uh-huh.
There's during the year, an amount of 50,000 due from a customer was written off, which I understand that this is a bad debt and it affects the income statement as an expense.
How much was written? How much was written off?
50,000 due from a customer was written off.
So,
And then there's also a provision for doubtful debts, which was required as at the end of the year.
okay. Thanks very much for that question. So, let me explain. So, that 50,000 that was written off, was it in adjustment or it was in the trial balance? Was it in additional information like this one? Okay, like this one.
Okay, all of them
are in what?
They are in the end period end adjustments, in the notes, period end adjustments, additional information.
Okay, let me answer your question now. So, if first and foremost, amount written off. So amount written off, you know, it means that according to what you said, you are very right, it's a bad debt. Okay. Now, when bad debts appear in the additional information, when BS bad debt, okay, appear okay, so when they appear in the additional information, okay, in additional information, you treat them twice. So additional information, additional info, you treat them twice. Number one, you take them, okay, so take them, okay, to when I say IS, it is income statement or profit and loss as an expense. That is what happens. Then also, so that is number one. Also, on the same note, also, you take them to the balance sheet to go and also take them to BS balance sheet to reduce the debtors figure. Reduce debtors figure. Okay, the debtors will reduce because you've written off 50,000. So to reduce the debtors figure. So this is what happens on this one. Okay. So that's what goes on. So again, yes, please. You see what I mean? So you take them to the
It's okay.
yeah. So what you do, you take them to the income statement as an expense, a bad debt, and also take them to the balance sheet, ABS, to reduce on the debtors figure. So if the debtors figure was 100,000 and you've written up, if it was the debtors figure was 150,000 and you write off 50,000, you remain with the good debtors of how much? Good debtors of who? Of okay, let's make it practical. Do you have the question with you, the same question that you're talking about?
Yes, I have.
Okay. If you have that question, let's do is give me the total debtors. What was the total debtors? We are now sorting out that question together right now. Give me the total debtors figure. How much was it? Give me the figure for debtors. How much?
It's trade debt 70,000.
It was how much?
70,000.
The total debtors was
70,000.
20,000.
Yes,
And then
Yes.
you have to write of how much? Write of what?
the write-off is 50,000.
Write of how much?
50,000.
Yeah, that's what they were not good. They didn't do this themselves a favor. Eh? They had to write off all this much. Anyway, it's just a question. Because which means you are going to have good data of what? You write off that. So net data of how much? Okay, so just a question, just to understand the concept. So the net data will remain how much? 20,000, not so. Are we together? Are we together there? Are people with me?
Yes, sir.
Yes, we are together.
So meaning you have the total debtors or total customers who have bought on credit of 70,000. Now you write of 50,000. You are going to have the net debtors of 20. So this one in the balance sheet, it will be like the same way. Total debtors write off this. Okay, so this one will be an expense. It's a bad debt. It will go to, for you to write off, it's a bad debt, so it will go to the expense in the income statement as an expense. Okay, let's continue sorting out the issue. So this one will go to the IS income statement. Okay, all right. So that's what goes on. So that one will go to the income statement as an expense. I don't know if you are following, please. Are you able to follow? Then we have the other one, because this one goes to the income statement as an expense. Okay, I'm sure you are able to take out this one. I'm sure you're able to see. So that's one will go to the income statement as an expense. Are we together there? Hello?
The
So-
network logged me out, but I've seen what you've done there.
Yeah,
You've
so,
subtracted the total debtors to
uh-huh.
get the 20,000. So the 20,000 is what goes where?
Yeah, to the balance sheet, that's the net debtors, please. So that is the net debtors. So this net debtors will go to the BS to indicate that these are the debtors that we have now. The good customers that we have, right? So under debtors, because that one would have already written off the 50,000. So it is just an expense that we incur that will go under expenses in the income statement. So an example on this question we did, it will come under expenses in this income statement. It will fall under one of these expenses, you put a bad debt here. Okay, so it should come here as a bad debt, and it should also go to the balance sheet to show that it has reduced the debtors figure from 70,000 to 20,000. All right, that's a treatment it will have. This is 50,000. Yeah, I'm sure I've answered.
Okay.
Yes.
Yes, you have answered. Thank you very much. And
Oh.
then the last one is on provision for doubtful debts.
Okay,
It's
so
appearing twice.
uh-huh.
In the trial balance, there's a provision for doubtful debts of 50,000. Again, in the period end adjustments, there's also another provision for doubtful debts of 45,000, which was required as at 31st December 2021.
Okay, fine. So trial balance, provision for doubt. Give me the figure for provision for doubtful. How much was it?
It was 50,000.
Okay. It was 50,000. All right. So now what happens is you have to, this is in the trial balance. Then give me the provision for doubtful debts in the adjustment. This is adjustment. I want, before you write this exam, I want everyone else to be comfortable so that, because in accounts, the entries count. Even if you can make a mistake elsewhere, but if you have many entries that are correct, then you find you do well. So the provision for what? For doubtful in the adjustment provision, how much was it?
45,000.
Okay. So do you know what is happening now? It means it is 45,000. What it means here let me explain for people to understand. So meaning the difference 5,000 is your other income, which should be added to what? To the gross profit, because you had set the provision that even if 50,000 you don't receive. You get my point? It's okay. That's why the provision that you are setting the trial balance that, okay, even if we don't get 50,000, it's okay. Then you will discover that the provision has come to 45,000. So meaning that it is a reduction from 50,000 to 45. So that reduction is your other income. Okay, so there is a reduction. Okay.
Mr. Stanley,
Let me just let me answer the question. Let me explain. I'll give you time to ask. Just a minute. So reduction in provision means other income. Reduction in provision means other what? Other income. Why may I say other income? Because you said that even if I don't get 50,000 kwacha, it is okay. Then you discover that you don't get the money that you don't get is 45,000. So meaning you haven't lost anything. The provision has reduced to 45 from a 50 that you had put. So meaning that reduction is your income. I don't know if you're getting my point.
I'm getting you. Then I don't know, maybe it's the English that I'm not getting, because in the adjustment it's saying an additional provision for doubtful debts of 45 was required as at 31st December 2021.
There's anyway, you didn't, okay. You said that the provision for doubtful debts was how much initially? 50,000?
Initially, in the trial balance is 50,000, but I don't know the English, which is in the adjustments. It's saying an additional provision for doubtful debts of 45,000 was required as at 31st December 2021.
Okay, so meaning if it was additional, meaning the total provision could have come to 95,000, but I doubt that question. Where did you get that question from?
It's in the past paper for, this is November 2021, end of first final examination.
Okay. There's anyway, I just need to come and is it possible? Anyway, we just need to come and do that paper then. Which year was it?
It's for 2021 November.
Okay, you need to share that. You need to share that paper. Probably tomorrow we can can look at it throughout so that I see the actual question the way it is, because there will be other information that is in the trial balance. I need to check the trial balance carefully. But I know the first one I've explained. If it was a decrease, here, it would have been 5,000 would have added to the gross profit as another income. So meaning it would have boosted the gross profit base. So it would have been a reduction in the provision. Not the total provision cannot continue increasing to 45,000 like that unless otherwise. But it may be possible because of the budget written off was too much, because it 50,000 they didn't pay us, so it could have been possible. Okay, I need to look at that question carefully. But since I've answered your question here, this one I need to come and counter check the question paper. Okay, you need to give us that question paper. I have a look at it carefully. So right now I'm told we need to do one topic in QM, which is the regression and correlation analysis. So please don't leave. We can have just 5 minutes. And we switch on to we switch on
thought
to
we were doing ME.
come again.
I thought we were going to do ME.
Okay, let me consult Mr. Njob just now. If we can do ME instead of QM. I need to consult him just now. Give me about 5 minutes, then we will continue. If it's ME, we can do it. I need to continue. I'm going to see which topic we can look at in ME. In ME, have you done demand analysis or cost analysis? How far have you gone in ME? Okay, let me ask you, Mr. Njovu, just now. And we can, don't leave, please don't leave. Can do,
Costing, I think costing it's a little bit of a challenge.
okay, so, okay, let me consult Mr. Njovu if I can do costing with you just now. Let me consult him.
Sorry, costing is in which cost? Oh, it's in accounts.
Yeah, no, costing is in account, but also in this same course, there is a topic called cost analysis, cost and revenue analysis. I don't know if you have done that already. Cost and revenue analysis. Have you done demand analysis already?
I think yeah, we did something.
Okay, I know.